looking at 7 phases. Let me tell you, you cannot find these 7 phases in any academic dictionary. These phases, I have seen these graphs and I have interpreted these particular specific graph. So typically from the year 1991 to August 2003, and then we will be talking about 2003 to 2007. Then we will be talking about 2007 to 2010, post the subprime crisis period. And then we will be talking about the period 2010 to 2014, till such time the BJP government took over. And then from 2014 to 2020, we will be talking about how this market went up, especially as far as the stock market is concerned. And then we will be talking from the corona till October 2021, last month, till such time the market kept on going up. And then we will discuss for a short time about November 2021, when this whole lot of corrections happened. Right now, if you look at the first phase, I would like to share this particular screen with you for you to get a better understanding. Let me share the screen with you so that you get to see this. I hope you're able to see this graph, right? This was the period from November 1995 to August 2003. There is a specific reason why I have considered this period, because during this period, it was completely range bound. You can see this range. Of course, you can find this graph like this. It takes a sine wave kind of a formation. It is a sine wave, something like this. It is going like a wave formation, and it has remained in the same range for a very long time. For 8 long years, it was range bound at 1,200 points. Let's call that as phase 1. Now we will go to the second phase. The second phase typically is from the month of August 2003 to December 2007. Look at how the market has moved from approximately 1,200 points to 6,000 points. It's been a continuous run. This was one of the greatest bull runs. In fact, there is an academic theory that whenever interest rates are raised, interest rates go up, then the share markets normally come down. Remember those taper tantrum? Already I've put a detailed video on taper tantrum, guys. Please look at that video. It's generally an academic theory that whenever the interest rates go up, the bond rates go up, what happens is most of the stock market money is taken out and it goes to the bond market. We have seen some dips in the recent past, I think 4 or 5 months back. All that hit. One day the US government, Federal Reserve, announced that they will be increasing the interest rates, and the next day markets fell down, right? Okay, that's a different subject. We will talk about it in detail. Put up some videos also. Please subscribe to this channel and have a look at those videos just to, understand the relationship between bond rates and the stock market. Now it's the easy money, which is, one of the most important reasons for this stock market, this bull run. It's also because of easy money going to this corona. A lot of money, liquidity has increased in the system, and which is finding its way into the stock market. Because that's a different subject, and I will reserve the subject for a video later. But now, as far as the subject of the discussion is concerned, we're talking about the period from August 2003 to December 2007. Absolutely, it was a bull run from 1,200 to 6,100 points. Why are we talking about it? Because that was the time when the interest rates were raised in the US Federal Reserve. Throughout the world, interest rates were rising. But in spite of that, the markets were also rising. So there were lots and lots of academicians who were wondering how the basic academic theories are getting violated. So that was the period, which is the phase 2 period, which is from August to 2003 to December 2007. And I call it an inclined plane. This is my own theory. This looks like an inclined plane, right? Like a trigonometry, you can have a cos theta, sin theta. All right. Then the next period is extremely important. You're talking about the period from January 2008 to September 2010. All of us are aware of this not corona, I'm sorry, the subprime crisis, which hit the whole world, starting with your Lehman Brothers and host of big companies, your Arthur Andersen, host of companies, your many banks, etc., etc. So that was when the market fell down from 6,000 down. I think it came down to 3,000 also, I guess. From 6, it came down to 3,000 somewhere in the month of, I think, September, October of 2009. I remember those periods very well because I happened to be in Muscat at that time and I was witnessing all these things. So for the market to go down from 6,000 to 3,000 and once again reclaim that level, it took approximately 1.5 years, 21 months. So which means this downfall started in the month of January 2008 and it continued till September of 2010, right? Something like a bathtub formation. That's the phase 3. Now the next phase is October 2010 to February 2014. It was kind of a plateaued phase, guys, because all of us know that during this period, it was full of scams and, most decisions were not taken. People were afraid to take decisions and, it was kind of a very plateaued phase. India didn't see any significant growth during that time. We're talking about 2001 to 2014 till such time. The government change. We can't attribute that as a reason because I'm not discussing politics, but I'm just sharing the stock market data with you. And for continuous 4 years, market didn't make any headway and it was very range bound during that phase, which I call as phase 4. You cannot find it in any theory books. It's my own analysis of the stock market. Then comes, this is the graph that you can see from March 2014 to January 2020. Now you might ask, why have I taken up this? Because certain important milestones have happened during this time. Of course, March, April, May 2014, you can say that was the time when the new government came into power, the BJP government came into power. Of course, we cannot attribute BJP for what is happening in the stock market. We really don't know because that correlation needs to be studied. But I'm sharing the facts and figures with you as far as the stock market is concerned. March 2014 was the time when the new government took place. And why January 20? Because January 20 was the start of this corona. Remember those Italian ships? The ship was parked outside Japan port. And that was, the time when this corona came. And you can saw that dipping after that. The lockdowns might have happened in the month of March 2020, but the news about corona, the market falls, all that started in Jan. So we consider that as an important milestone, which is the reason why I have taken up January 2020. See how the market has moved. Absolutely. Of course, there have been some amount of aberrations because of demonetization, which happened somewhere in 2016. And then you had this GST and then this Doklam Chinese crisis, etc., etc. But all said and done, these dips have been there. But apart, in spite of all those dips, the markets moved from approximately 6,200 to 12,200. Guys, what is needs to be considered is for this Nifty 50 to achieve the 6,000 level, it took how many years? Approximately 20 long years, 1995 to 2014, 19 long years. And in just 5 years, the markets moved the same amount from 6,200 to 12,220, which is evident from this particular graph. Then comes the corona period. We all remember February, there were lockdowns. I have some dates here. Let me share those dates also with you. The COVID pandemic, it was announced as a pandemic on 9th of March. And on 12th of March, something happened, WHO. WHO made some statements about this, and on that day the market fell by more than 800 points. That was what we are talking about. And then 23rd March it fell by approximately 1,200 points when the whole country went into a lockdown. So it's some kind of a tick mark formation. 1,200 points fall. But guys, for 3 months nothing happened. But in spite of that, if you see the rise, in just a period of 4 or 5 months, we were able to get back to that level of 12,200. And not just that, from 12,200, there was absolutely no looking back, and the market went all the way till 18,700. And that was when a lot of jibes were going around in the market that NIFTY has become an adult, the Sensex has become a senior citizen, and people were overjoyed, overlooking. We could have seen market experts discussing when the NIFTY will touch 19,000 and 20,000. There were experts coming all around talking about how in the next 6 months NIFTY will be touching 20,000. Some kind of a irrational exuberance we could witness during that time. But guys, market correction is extremely important, because if that correction does not take place, the fall will be a lot more severe. A lot of market experts were discussing that aspect too. And then the final phase we are talking about is November 2021, the same month we are in. And this was how the market was moving in the last 17, 18 days. You can see that. So from a high of 18,700, the market has now come down to 17,000 today. This is a correction. We really don't know whether it is a healthy correction or more corrections will happen in the coming days. We don't know about that because we are all uncertain. But one thing we need to be very certain about is this 500 fall is good for the market, because some kind of a consolidation, some kind of a correction is extremely important. Because if you look at this from February 20, for example, from from February, March, April, from the month of May onwards, there has not been any reasonable kind of a correction. There might have been some shallow corrections once in a while, but actual correction has not happened at all. So that's what it is. So now I will just summarize the whole discussion for you. The phase 1 was like this, range bound like this, and then the phase 2, then of course the phase 3, it came down and then it went up, then phase 4. And look at the kind of rise that has been happening. It completely captures the journey in the last 25 years, and especially the phase 6 and phase 7. You can look at it. This is how the Indian economic story is expected to unfold in the coming years. Guys, let me also share with you. Now we are approximately a $2.5 trillion economy. The government is taking all steps to make it into a $5 trillion economy, which most economists say that it would be possible in the next 3 years or 4 years. Guys, when the Indian economy GDP grows from $2.5 trillion to $5 trillion, where do you think this money will go? Ultimately, this money will come back into these companies. Somewhere it has to get into these companies, somewhere it has to get into the stock market. And stock markets will see a very great increase, along with all the other initiatives like China Plus One and host of economic initiatives. We will be putting another video on economic initiatives. We will also be putting up a video on cryptocurrency. We will also be putting up a video on PLI schemes. Do remember to subscribe to this channel. We will be giving making lots and lots of videos on these current topics of interest, especially as far as India's growth story is concerned. So do subscribe to this video and don't forget to press the notification bell, right?